Good day, welcome to Competency Appraisal course, and this is Financial Accounting and Reporting. I am Jovit G. Cain, and I will be the one to discuss to you the lease accounting. Ayan. So, lease accounting is one of the other topics as mentioned in the FAR syllabus. Ayan. So, you do have here 8.2 as the leases. Apply 8.2.1, apply accounting standards applicable to operating lease. And 8.2.2, apply accounting standards for application to finance lease. So let's have the first one, operating lease. So this is in part with the lessor. So as an introduction, so lessor accounting under the new standard is substantially unchanged from the old standard, which is from PFRS 16 to PAS 17. So, IFRS 16, paragraph 61 provides that the lessor shall classify lease as either an operating lease or finance lease. The same pa rin. So, let's have the definition. If we say operating lease, so a lease that does not transfer substantially all the lease and rewards incidental to the ownership of an underlying asset. So, wala siyang transfer of ownership of the lease and rewards. And for finance lease naman, meron siyang transfer of substantially all the lease and rewards incidental to the ownership of the underlying asset. So, again, by the way, let's have muna the MCQ theory number 1. The classification of the lease is normally carried out A, at the end of the lease term, B, after a cooling off period of 1 year, C, at the inception of the lease, or D, when the entity deemed it to be necessary. Okay. So the answer for this one is letter C. So at the inception of the lease. So that is the time you have to classify the lease as either operating lease or finance lease. So when is the lease classified as finance lease? Again, so the lease is meron siyang transfer of ownership of the underlying asset at the end of the lease term. And then, meron siyang bargain purchase option and expected to exercise or expected to be sufficiently lower than the fair value at the date of option becomes exercisable. And at the inception date, it is reasonably certain that the option will be exercised. In letter B, dapat yung option, bargain purchase option, is reasonably to be exercised by the lessee. And letter C naman, that the lease term is for major part of the economic life of the underlying asset, even if the title is not transferred. So D, the present value of the lease payments must be substantially all the fair value of the underlying asset at the inception of the lease. So with these 4 major criteria, these are determinative in nature, meaning any of these would normally result to a conclusion that the lease contract is considered as finance lease. So, by the way, for C and D, ayan, so ang question lang natin sa C is that, how do we consider the major part? So, ano pala yung requirement for major part? And for D naman, how can we say it is substantially all? So, for major part under the new lease standard does not provide a clear-cut definition of the major part. So, balik po tayo again sa USC GAAP. Pag sinabi natin major part, it means to say at least 75% of the economic life of the asset is now in part with the lessee. Then, if it is substantially all, it means under, same pa rin po, no? Hindi pa rin sinabi sa standard. Here ko lang clear-cut definition. So, under US GAAP pa rin, substantially all means at least 90% of the fair value of the leased asset. Okay. So, other criteria, suggestive criteria are as follows. The first one is that the underlying asset is of such specialized nature and only the lessee can use it without major modification. Then, if the lessee can cancel the lease, the lessor's losses associated with the cancellation are borne by the lessee. So, yung risks, ayan, naka-lessee na. And gain or loss from the fluctuation in fair value is residual accrue to the lessee. And the lessee has the ability to continue the lease for secondary period at the rent that is substantially lower than market rent. So in this case, these are suggestive criteria. So it may be, no? Maybe, meron siyang finance lease. So, in terms of land and building lease, same pa rin siya, no, if it is basket price, kumbaga, in terms of property, plant, and equipment, you need to separate this one. No? Separate mo yung land and building elements. Ayan. So, by using relative fair value, and if cannot be allocated reliably, it is considered as finance lease unless it is it has a clear that guidelines that it is operating lease. If the land element is immaterial, so treat the land and building as a single unit. Ayan. Now, for operating lease lessor, for straight or lease payments, the rent income is either on a straight line basis or another systematic basis. So, straight line, divide that one by the number of lease term. So, the entry of this is you debit cash and credit rent income. Therefore, executory cost, the one who will going to board that one, or liable for that one, is the lessor. However, it may be passed to the lessee depending upon the lease contract. So, you just debit executory cost and credit cash. Now, for initial direct cost added to the carrying amount of the underlying asset and recognized as an expense over the lease term on the same basis as lease income. So, initial entry, you debit deferred initial direct cost and credit cash and amortize that one on every lease term. No? Then, amortization of initial cost debit, then credit deferred initial direct cost. Now, for operating lease lessor security deposit, so this is refundable upon lease expirations. Usually, this is long-term liability. You debit cash, then credit liability for rent deposit. And then for lease bonus, it is considered as an earned rent income. So, an earned rent income to be amortized over the lease term. So, the initial entry is you debit cash, then credit an earned rent income. Therefore, the amortization of the lease bonus, no, depending upon the lease term, so you debit an earned rent income and recognize the rent income as credit. Now, for the next one, unequal rental payments. So, if there may be cases that the rental payment is unequal, so usually equal man yan siya, no? But if there may be cases na unequal siya, the total cash payments for the lease term shall be amortized uniformly on a straight line basis as rent income over the lease term. So, you need to determine the uniform amount of that particular rental payment. Okay? So, like for example, this one. As an inducement to enter the list, Aris Company, a lessor granted Hobson Company, a lessee, 9 months of free rent under 5-year operating lease. The lease was effective on July 1, 2015 and provided for monthly rental of 100 and syempre, after 9 months pa lang, no? So, after 9 months, that is April 1, 2016, and in the income statement for the year ended June 30, 2016, what amount should be reported as rent expense? So, A, 1,020,000, B, 900,000, C, 300,000, or D, 255,000. Yan. So, pause nyo lang, no? Then, try nyo compute. Okay, so let's proceed na the answer. So, the answer for this one is A, 1,020,000. How come it is 1,020,000? So, the solution of this is that the first one is the total rent. This should be X income, no? Rent income. And 100,000 times 51 remaining months. So, 51 kasi 5 years initially, no? Times 12, 60. 60 months. But, syempre, meron siyang 9 months na free rent. So, 51 na lang yung remaining months. For a total of 5,100,000. And then, average annual rental starting or for July 1, 2015 to June 30, 2016 is 5,100,000 divided by 5. So, meron siyang uniform amount na 1,020,000. So, the answer is letter A, 1,020,000. Okay? Now, for the next one, so like here, this is an example niya, unequal payment na talaga nyo kanina kasi meron free months. So in this case, unequal na talaga ito. So how the company lessor lease an equipment under an operating lease, and the lease term is 5 years, and the lease payments are made in advance January 1 of each year as shown in the following schedule. So January 1, 2015, 1 million, 2016, 1 million, but in 2017, naging 1,400,000, 2018, naging 1,700,000, and 2019, naging 1,900,000. So on December 31, 2016, what amount should be recognized as rent receivable? Ayan. So 2 years pala, no? Kasi 15, 16. So A, 1,400,000, B, 800,000, C, 400, or D, 0. So ayan. So if you try nyo, no? I-pause nyo lang yung video. Okay. So the answer for this one is 800. How come it is 800? So, the lease payments are as follows. Ito lahat, add mo lang. Lahat, no? Total 7 million. And divide it by the lease term na 5 years. So, yung average annual rental in a uniform basis is 1,400,000. And since the question is rent receivable, no? So, rent income for 2015 and 16 is 1,400,000 times 2 kasi for 2 years, so meron siyang 2,800,000. And then, less the rent received or yung cash receipt mo, no, for 2015 and 2016 na 1 million and 1 million to 2 million. So still, meron pang receivable na 800,000. So rent receivable for December 31, 2016 is 800,000. Now for another one, Jade Company purchased a new machine for 4,800,000 on January 1, 2015 and leased it to East the same day. The machine has an estimated 12-year life and will be depreciated 400,000 per year. The lease is for a 3-year period expiring January 1, 2018 at an annual rental of 850,000. Additionally, East paid 300,000 to Jade as a lease bonus. Merong lease bonus yan. To obtain the 3-year lease. Jade incurred insurance expense of 80,000 for the lease machine during 2015. So what is the operating profit on the leased asset for 2015? So syempre, if we say operating profit, it's just income minus expenses. So what is the answer? Is it A, 670,000, B, 550,000, or C, 470,000, or D, 370,000? Tataan nyo muna. Pause nyo yung video. Okay, so next one. What do you think is the answer? The answer is letter C, 470,000. So how come it is 470,000? So the annual rental is 850, right? Add mo lang yung amortization of the lease bonus kasi this is unearned rent income, no? And then rent income na siya pag-amortize. So 300,000 divided by 3, the lease term. So meron kang total income na 950,000. And then depreciation kasi ikaw pa naman yung may-ari ng property. So depreciate 400,000. And then insurance for 80,000, so total of 480,000. So operating profit is 470,000. The answer is letter C, 470,000. Okay. So that is for operating lease. Now let's proceed to finance lease naman. So ito medyo marami itong finance lease, no? So let's start with the lessee accounting. So definition of lease, again, the IFRS 16 is the new lease standard, and the lease is defined as a contract or part of the contract that conveys the right of use the underlying asset for a period of time in exchange for considerations. Remember the word right of use. So the underlying asset is a subject of the lease for which the right to use that asset has been provided by the lessor to the lessee. So, lessee now obtains the right to use the underlying asset, then the lessor provides the right to use the underlying asset. That's why for finance lease model for lessee, at the commencement date, a lessee shall recognize the right of use asset. So this is actually an account title. So account title po ito, no? Right of use asset. And a lease liability. Okay. So you recognize the asset as right of use asset and the liability as lease liability. So all lease shall be accounted for by the lessee as a finance lease under the new lease standard. Okay? So let's have the MCQ theory. Under IFRS 16, paragraph 22, a lessee is required to recognize A right of use asset and lease liability, B, right of use asset but not lease liability, C, lease liability but not right of use asset, or D, neither right of use asset nor lease liability. So, siyempre, the answer for this one is letter A, right of use asset and lease liability. So, sabi kanina, under lessee accounting, di ba, all of the lease is considered as finance lease. So, kailan po ba maging operating lease? So, two optional exemption, if it is short-term lease and low or low value lease. So, this is somewhat similar with operating lease. Na? I mean, operating lease kanina sa lessor na part. So, dito, this is lease payments and the lease payments is considered as rent expense. Kasi rent income dun sa lessor. So, rent expense naman ang kay lessee. So, in either, again, straight line basis or another systematic basis. So, the question now is, what do you mean by short-term lease and what do you mean by low-value lease? So, short-term lease is the term of 12 months or less. And take note, if meron siyang purchase option or bargain purchase option, it is not considered as short-term lease. Now, if low-value lease naman, the new lease standard does not provide for quantitative threshold for low-value asset. So, professional judgment. So, depending upon also the problem, no, pag sinabi niya low-value lease, that is to be accounted using operating lease. So, the lessee, MCQ theory, the lessee may apply the operating lease model under what condition? A, short-term lease, B, low-value lease, C, both short-term and low-value lease, or D, under all circumstances. So, the answer is letter C, both short-term lease and low-value lease. Now, for a short-term lease is defined as A, a 12 months or less, or B, 6 months or less, C, 12 months lease with a purchase option, or D, 2-year lease with option to terminate. Okay, so the answer for this one is letter A, 12 months or less. So, mali yung letter C, no? Kasi dapat wala siyang purchase option. Now, for this one, which of the following statements is or are true about low-value lease? So, A, the value of the underlying asset is based on the value of the asset new regardless of the age of the asset. B, the term of low-value lease may be more than 12 months. Or C, an underlying asset does not qualify as low-value lease if the nature of the asset is such that the asset is typically not at low value when new. Or D, all of these statements are true about low-value lease. So, what do you think is the answer? So, this is actually another definition of low-value lease. No? The answer is all of these. So, all of these statements are true about low-value lease. Okay. Next one is yung finance lease na lessee. So, finance lease is defined as a lease na meron transfer of risk and rewards. Ayan. And then, let's have the computation na for initial measurement of right of use asset. So, the right of use asset is defined as an asset that represents the right of a lessee to use an underlying asset over the lease term in a finance lease. So, it is measured at cost at the commencement date. So, again, right of use asset is an account title and the measurement of that one is at So the cost of right-of-use asset comprises all except. So is it A, the amount of initial measurement of the lease liability or the present value of the lease payments? B, lease payments made to lessor on or before the commencement date, such as lease bonus, less any lease incentives received. C, initial direct costs incurred by lessee. Or D, estimated cost of dismantling, removing, or restoring the underlying asset for which the lessee has no present obligation. So what do you think is the answer for this one? Okay. So the answer for this one is letter D. Except for letter D. Kasi dapat meron siyang present obligation. Okay. So these are all, ayan, the measurement of the, or the composition of right-of-use asset. Yeah. Subsequent measurement. So, we are done with the initial measurement. So, syempre, subsequent measurement na naman na. So, IFRS 16, paragraph 29 provides that a lessee shall measure the right-of-use asset applying the cost model. So, parang PPE lang ng cost model, in which the cost less any accumulated depreciation and accumulated impairment costs. Moreover, the carrying amount of the right-of-use asset is adjusted for any remeasurement of the lease liability, especially if the lease is extended. Now, meron siyang extension. Ayan. So, nag-apply siya for additional extension, I mean. Presentation of right-of-use assets, a separate line item, the financial statement possession. As an alternative, pwede rin siya as part of the PPE, property, plant, and equipment. However, syempre, meron siyang disclosure in the notes to financial statement. Other measurement models, it may be, for example, if the lessee applies the fair value model in measuring investment property. So, if the right-of-use asset is considered as investment property, so fair value model, the lessee shall apply fair value model to the right-of-use asset that meets the definition of investment property. Then, if the right-of-use assets relates to a class of PPE to which the lessee applies the revaluation model, so a lessee may elect to apply the revaluation model to all of the right-of-use asset that relates to the class of the property, plant, and equipment. So aside from the cost model, pwede rin siya revaluation model. So the depreciation of right-of-use assets, syempre asset niya siya, diba? And this is somewhat similar with property, plant, and equipment na po siya, meron siyang depreciation. So, the depreciation is you are going to use, take note. Kasi usually, ano pala yung gagamit? It may be lease term ba or the useful life of the asset. So, again, lease term ba or useful life of the asset? So, if you are going to use useful life of the asset under the following conditions, dapat merong transfer of ownership. And second one, reasonably certain that the bargain purchase option is to be exercised by the lessee. Transfer of ownership, reasonably certain to exercise the bargain purchase option. So, ang gagamitin na useful life of for the right-of-use asset is useful life. Otherwise, ayan, the lessee shall depreciate the right-of-use asset over the short term between the useful life of the asset and the lease term. So, let's try. A lessee with a lease containing a purchase option that is reasonably exercised, certain to be exercised, should be depreciated or should depreciate the right-of-use asset over A, useful life of the asset, B, lease term, C, useful life of the asset or the lease term, whichever is shorter, or D, useful life of the asset or the lease term, whichever is longer. Okay, so remember, meron siyang bargain purchase option that is reasonably to be exercised. That's why the answer is letter A, useful life of the asset. Yeah. So, measurement of lease liability. So, at the commencement date, the lessee shall measure the lease liability at present value of lease payment. So, we're done kanina with the right-of-use asset. So, now, let's proceed naman sa lease liability. So, lease liability, again, yun yung present value of all lease payments. Then, it is discounted using the interest rate implicit in the lease. If walang interest rate implicit, so you're going to use incremental borrowing rate. So, components of lease payments, so you do have fixed lease payments less any less incentives or disincentives, variable lease payments, exercise price of purchase option if the lessee is reasonably certain to exercise the option, amount expected to be payable by the lessee under residual value guaranteed, termination of the penalties if the lease term reflects the exercise of a termination plan. So let's try. The lease payments includes all the following. A. Fixed lease payments. B. Variable lease payments. C. Exercise price of purchase option that is not reasonably certain to be exercised. Or D. Residual value guaranteed of the lessee. Okay. So the answer for this one is letter C. Okay. So dapat hindi not, no? Reasonably certain. Dapat reasonably certain to be exercised talaga. So these are the components of lease payments. Now, other definition, residual value guarantee is the guarantee made to the lessor. So, yung mag-guarantee dito is the lessee. By a party unrelated to the lessor that the value of the underlying asset at the end of the lease term will be at least a specified amount. Ang guarantee naman, the portion of the residual value of the underlying asset, the realization of which by the lessor is not assured or is not guaranteed solely by party related to the lessor. So, executory costs, same kanina ng ownership expenses such as maintenance, taxes, and insurance for the underlying asset. So, such executory costs are expensed immediately when incurred. So, it will not form part as the cost of the lease payments. Hindi siya kasali. Which is not included in lease payments. Sinasabi ko kanina, any payments required by purchase option that is reasonably certain to be exercised. B. Costs for services and taxes paid by the lessee. C. Required payments over the lease term. Or D. Amount guaranteed by a party related to the lessee. Ayan. So, do you think is the answer? Okay. So, the answer for this one is letter B. Cost for services and taxes paid by the lessee. Okay. So, this is executory cost. Hindi kasali yung executory cost. Now, in computing depreciation of right-of-use asset under a lease, the lessee should deduct assuming that the lease transfers ownership of underlying asset to the lessee at the end of the lease term. Is it the guaranteed residual value and depreciate over the lease term? Okay. So, guaranteed residual value and depreciate over the lease term. C. The guaranteed residual value depreciated over the useful life of the asset. Or D. Guaranteed residual value and depreciate over the useful life of the asset. So, ano pala? Guaranteed or unguaranteed? Next one, useful life or lease term. So, in terms of the term, yun nga. Since, take note, meron siyang transfer of ownership. That's why you use useful life of the asset. So, either C or D. So, D is the answer. So, the answer is letter C. Residual value. Okay? Guaranteed and depreciated over the useful life of the asset. So, yung consider lang, kasi known by the lessor kasi yung residual value, no? Ayan. That's why, residual value guaranteed, known by the lessor. That's why, residual value guarantee yung gagamitin as deduction for the cost of the right-of-use asset. And then, divide that one by the useful life of the asset. Since, take note, meron siyang transfer of ownership. Let's have the illustration. So, lessee company lease a machine on January 1, 2017 with the following pertinent information. Fixed rental payments at the end of each year is 1 million. Lease term 5 years. Useful life of machine 6 years. Incremental borrowing rate 14%. Implicit rate, interest rate 12%. Present value ordinary annuity of 1 for 5 periods at 14% is 3.433. Then for 12%, 3.605. The present value of 1 for 5 periods at 14% is 0.519. Then 12% is 0.567. Option to purchase is 500. The lessee is reasonably certain to exercise the purchase option. So the which is ESD, useful life. The estimated residual value of the machine at the end of 60-year life is 600. Okay. So requirement, right of use asset, again, for letter A, right of use asset at January 1, 2017. Then B naman, lease liability at January 1, 2017. C, lease liability at December 31, 2017. And then B, depreciation expense for 2017. And E, the entry to exercise the purchase option. And F, if the purchase option is not exercised. Okay. So let's try. Ayan. So for the first one, right of use asset, so what we're going to do, compute for the present value of the lease payments. So present value of lease payments, 1 million times 3.605. So 3.605, the basis is the, ano pala yung basis? 12%. Kasi this is the implicit rate. Implicit rate yung una. Pag wala yung implicit rate, incremental borrowing rate. That's why 3.05. And then present value purchase option, 5 million times 0.67, which is the present value of 1 for 12%. So total is liability 3,888,500. So wala na bang yung sa direct cost, wala mga lease incentive, so automatic. This is the lease liability, and this is also the right of use asset. So you debit right of use asset for 3,888,500 and lease liability for 3,888,500. So for 4.A and 4.B, the answer is 3,888,500. Okay. So next one, 4.C, table of amortization. Ayan. Table for amortization here, the question is actually the lease liability at December 31, 2017. So compute using the table of amortization. So payment is 1 million, then interest, this one, 466,620, which is the present value multiplied by the percentage or the incremental implicit interest rate, I mean, not 12%. Okay? So this is now the interest. Then, I think meron, sorry. So 3,888,500 times 12% na implicit interest rate. Then you do have the interest of 466,620. Therefore, principal is the difference between the payment and the interest. And the present value is the present value from the preceding or at January 1 to 17 less payment attributable to the principal. Medyo bulol na ko na. 530,380. You do have the present value December 31 to 17 of 3,355,100. So the entry, this is the computation. Present value, beginning, less payment applicable to the principal. So you do have the present value of December 31, 2017 for the lease liability. Now for the entry, to record the first rental payment, just debit the interest expense for 466,620 and then the lease liability of 133,380 and the total cash payment of 1 million. Now for depreciation, to record the annual depreciation, you debit depreciation expense of 540,083 and accumulated depreciation for 540,083. So how do we compute this one? So 3 3,888,500 minus the residual value. Okay, residual value of the machinery divided by the useful life. So, baka sa useful life kasi merong bargain purchase option to be exercised or reasonably to exercise. So, assets depreciated over the useful life because there is a purchase option that is reasonably certain to be exercised. Ayan. So, this is for 4.3. Now, for 4.3 to exercise the bargain purchase option, what we're going to do is just debit Lease liability for the payment and credit cash for 500,000. Both 500,000. Okay? And then for F naman, in case na hindi in-exercise yung bargain purchase option. So, ayan. So, balik ulit kay lessor. So, determine first the balance. So, right of use asset, 3,888,500 less the accumulated depreciation. So, you do have the carrying amount at the January 1, 2022. And then, less the lease liability, which is this is the bargain purchase option like. Yan. So, meron siyang loss on finance lease. And this is the entry. Debit the accumulated depreciation kasi nga hindi niya in-exercise yung bargain purchase option. So, balik kay lessor yung machinery. And debit lease liability for 500 and debit also loss on finance lease and credit right of use asset. Kasi nga balik kay lessor. Hindi niya in-exercise yung bargain purchase option. Okay. So, this is 4.F. Now, let's have the next illustration. Okay, so in your materials, this is number 5, sample company. Simple company. Simple company lease and equipment on January 1 to 17 with the following information. So, annual fixed payment in advance at the beginning of each year, 1 million. Initial direct cost, 250. Meron sang lease incentive, 150. Residual value guaranteed. And the lease term, 5 years. And useful life of the machine, 6 years. Implicit rate of 8%. And the PVOA 1, 4.3121. PVO 1, 5 periods, 0.6806. So, requirement, lease liability at the beginning, and also the right of use asset, letter B. Depreciation, expense for 2017. And D naman, if the fair value of the asset at the end of the year is 250, give additional entry. And E, if the fair value of the asset at the end of the year is 350, give additional entry. So, let's start with the lease liability at the beginning. So, same pa rin, no? Present value of the rental and present value of the residual value guaranteed. So, you do have here the lease liability of 4,516,280. And then, add the initial direct cost and less any lease incentive received for us to be able to compute for the right of use asset. Ayan. So, iba yung lease liability dito, iba rin yung cost of right of use asset. So, journal entry, right of use assets, 4,616,280. And then, the lease liability, 4,516,280, which is the present value of the rental and the residual value guaranteed. And then, cash for the difference between the initial direct cost and the lease incentive. So, this is for 5.A, and this is for 5.B. Okay. So, next one here is for the computation of depreciation expense. So, cost for 616,280, the right of use asset, and then less residual value guaranteed for 300,000. So, the depreciable amount is 4,316,180 divided by the lease term. Bakit siya lease term? Kasi nga wala mang bargain purchase option at walang transfer of ownership na sinabi. So that's why depreciation expense 860,256. Okay? So bakit siya lease term again? Kasi whichever is lower between the lease term at saka yung sa useful life of the asset. Since mas lower si lease term kaysa sa useful life of the asset, kasi yung useful life I think is 6 years, no? 5 years lang yung lease term. Okay, bakit siya ganito? It's because yun nga, wala siyang transfer of ownership na sinabi at wala rin siyang bargain purchase option to be exercised reasonably. So this is 5 point. Now for the situation here, the fair value of the asset at the end of the year is slower than the guaranteed residual value. So sino pala yung nag-guarantee ng residual value? Siyempre si Lessee. No? Pero yung ginarantee niya is lower. Ay. 7,000 lower. So mayroong additional entry for the loss to be made. So you debit loss on finance lease then credit cash for the payment of 50,000. Alright, so this is for 5.2. Now for the next one, if the fair value is higher than the residual value guaranteed, so no additional entry kasi wala namang cash settlement. So this is for 5.3. 5.3, this is the entry. You recognize the loss if lower yung present value, fair value I mean. Then if higher yung fair value, wala siyang additional entry. Okay, so let's have the next one, which is meron siyang extension option. Okay? So pag meron siyang extension option, what we're going to do, and then if we enter into the lease of building on January 1, 2017 with the following information. So annual lease payments at the end of each year is 500, lease term is 5 years, useful life of machine, this machine natin is a building, 20 years, and then implicit interest rate of 10% and PVOA 1 for the 10%, 3.791. And I think that after 2 years, ayan, so the Lessee decided to extend the lease for further 5 years. Okay. So, you do have here additional information for the new annual rental payable, the new implicit interest rate, 8%, the PVOA 1 of 8% for 5 periods, and PV of 1 at 8% for 2 periods, and PV of 1 at 8% for 2, PVOA 1 at 8% for 2 periods. So the requirements are as follows. First one, the lease liability, December 31, 2019. The present value at January 1, 2020, which is the date of extension. And increase in liability and depreciation expense for 2020. Let's start with the lease liability at December 31, 2019. Same kanina pa rin, no? What you're going to do? Using the amortization table. So based on the amortization table, the balance of the lease liability is 867,900. This is letter A. Okay? Letter A. Letter A. 6.8. Okay, letter A yung sinabi. 6.8. And now for remeasurement of lease liability, present value of the remaining 2 years of alter. Diba? 5 years and then after 3 years, na-decide si company na extend. So meron pang 2 years remaining for the old term. And the annual rental for 2 years old term is 500. No? 500 each year. So multiply this one by the present value of an ordinary annuity of 1 for the new. Ayan. New implicit rate for 2 periods. 1.783. Then that is the present value at January 1, 2020 for the remaining 2 year of old term. Then add the present value of the extended lease. So annual rental now is 600 na siya for the extension. Multiply by present value of ordinary annuity of 1, 8% for 5 periods. Kasi 600 for 5 years. Ayan, 3.993. So meron siyang present value of 1 for 2022. The problem here is that this is present value of 1 for 2022. You cannot add the present value of 1 at January 1, 2020 at saka yung 2022. So what you're going to do, ito present value of January 1, 2022, you need to multiply na naman present value of 1 at 8% for 2 periods to compute for the present value at January 1, 2020. And then, add. The total present value at January 1, 2020 is 2,944,700. So, which is the present value of the remaining 2 years old term. And then, the present value of the extended lease. So, 891,500 plus 2,050,200. So, the total present value is 2,944,700. Okay. So, libo, di ba, no? Remeasurement of lease liability. So, present value of the remaining rentals of our lease term is this one. Plus, yung kanina, so yung new, no? Or the total present value at January 1, 2020 is 2,944,700. Less yung na-record pa lang, 867,910 the balance. So, merong additional or increase in the lease liability. That's why, you debit right of use asset for the additional or remeasurement of the lease liability, then credit lease liability also for the same amount. Okay? So, this is for 6 point. Now, for the depreciation, so right of use asset is this one right at the beginning. Then, less the accumulated depreciation for 3 years. So, you do have carrying amount of 750,200. And think that merong increase in liability. It would also increase the right of use asset. That's why the new carrying amount of January 1, 2020 is now 2,834,990. And since this is depreciation method, no, or depreciation, change in, it may be accounting estimate, yun nga. So, treat it as currently and prospectively. So, no need to adjust the prior year depreciation. That's why the depreciation now is 404,999. And then, how do we compute this one? The new carrying amount divided by 7 years. About 7 years. Kasi, 2 years remaining plus additional 5 years. No? So, total, all in all, 7 years. So, this is for 6 point B. Ayan. By the way, we're done pala yung kanina. This is the last one. So, let's proceed to the next one, variable payments. So, if it is for variable payments, what we're going to do, same lang, no? Compute mo lang yung present value of the variable payments. So, January 1, 2017, na nati-entered into 8-year lease of the floor of a building. Ayan, so yung specific unit lang pala, no? With the following terms. Annual rental for the first 3 years, payable at the end of each year for 300. Annual rental for the next 5 years, payable at the end of each year, 400. Implicit interest rate is 10%. Present value, ordinary annuity of 1 at 10% for 3 periods, 2.487. Present value, ordinary annuity of 1 at 10% for 5 periods, 3.791. Present value of 1 at 10% for 3 periods, 0.751. And the lease provides for neither a transfer of title to the lessee nor a purchase option. Okay? So, compute for the total lease liability lang yung question. So, what you're going to do, you just add the present value of the annual rental for 3 years. That's one. So, the total present value of rental for 3 years is 746,100. And then, add mo lang din yung annual rental for the next 5 years. So, annual rental for next 5 is 400. And then, multiply by the present value ordinary annuity of 1 for 5 periods. So, as you can see, this is present value January 1, 2020. The problem is January 1, 2020. So, no? Pero ito, you cannot add this one. No? Ito, January 1 to 17 saka 2020. So that's why you need to discount ulit the present value of January 1, 2020 using PV of 1 at 10% for 3 periods. So 0.751. So, therefore, the present value of January 1, 2017 for the annual rental for next 5 years is 1,138,800. So, you can add this one. Add mo lang yung present value for 3 years and present value of 5 years. So, meron siyang total present value of 1,884,900. Okay. And for, I think this is the last one for the lease accounting under the Lessee. Actual purchase of the underlying asset. So, there is actual purchase of underlying asset. What are you going to do? Kumbaga, during the time of the lease term, nag-decide na si company na we buy the item. Yeah? So, in this case, NNT purchased an equipment that it had been leasing under a finances of 4 million. So, the balance of certain accounts of the rate of actual purchase are as follows. Rate of his asset 5 million, accumulated depreciation of 1,500,000, and lease liability of 3,800,000. Question, what is the cost of actual purchase of the lease equipment? Ayan. So, they're going to do, okay, compute for the right of use asset 5 million, the accumulated depreciation of 1.5, so meron siyang carrying amount na 3,500,000. And then, add the cash payment. Na? Para sa yung somewhat similar sa trade-in, na? Kumbaga, or di kaya exchange, na? You are to add cash payment. So, meron kang total consideration na 7,500,000. And then, less the lease liability, so you do have here the cost of the equipment purchase as 3,700,000. So, journal entry as follows. So, it debit equipment for 3,700,000. Debit also for the accumulated depreciation for 1,500,000. And lease liability of 3,800,000 kasi wala na ito, diba? And right of use asset, tanggalin mo rin. And you do have here the cash payment for the actual purchase of the underlying asset for 4 million. Okay. So, ayan. The next one is yung direct finance lease.